questions, obviously you can post those questions in the chat. Also give me an email at the end if you want. And so first though, just so I can make sure that this what we cover today is is very impactful. Um, a question or two, if that's okay. So how many people in our group here today are brand new to the supply and demand strategy that I talk about in these sessions? Anybody brand new to it? And the reason I ask is because we can, we can take this deep. We can keep it really simple. I mean, we always keep it simple, but okay. So welcome. All right. Well, how about we'll do both? We'll do both. The nice thing is, if you really think about it, and this is a big piece here. So, if you really think about it, um, any significant skill, not any, but most significant skills in life, it's just really all about mastering the basics, right? Um, I don't think anything out there is completely rocket science complicated, and this is certainly one of those things that everybody seems to just overcomplicate so much. So the theme here is one thing we know is many major financial institutions, banks do very well in the financial markets, are very successful in the financial markets with their buy and sell decisions, and the average trader and investor isn't. I think we'd all agree with that. So what are big banks and financial institutions doing that individual traders and investors are not, right? It's really kind of that simple if we dive into that. Now, I was fortunate enough to start my career on the trading floor of the Chicago Mercantile Exchange many years ago. And with my job in the beginning to facilitate institutional order flow, I got to see that firsthand at the level of the transactions themselves. Okay. And what I saw every day was, again, banks, financial institutions tended to be right in their decision making process most of the time, and as a whole made quite a bit of money. Where at the same time, the average trader or investor out there tended to be incorrect or wrong in their decision making process, and as a whole, either lost money or never came close to achieving their financial goals. And that was over 20 years ago now. So, what do you think's happened in the past 20 years? Well, it's about, hold on, what is it? Yeah, it was about 20 years ago, a little more. Has the gap between those two groups gotten wider, narrow, stayed the same? Right? Yeah, exactly. Nothing's changed. The gap between the professional and the novice, as far as performance goes, really hasn't changed. So what fascinated me and really got me going in this, got me interested in this business was this. When I realized that, wow, this group is so good at making buy and sell decisions, and this group over here is so bad at it, yet they're both buying and selling in the same market. Does that make sense? Imagine the first day you would realize that. Your next question would be, okay, what is this group doing over here that this group isn't? And vice versa. Tracking those buy and sell decisions on a price chart is what I did. What came from that is the supply demand strategy that we go over here so often. Does all that make sense? So it really comes down to having this razor sharp focus on answering these two questions and looking at a price chart to do it. Where will price turn and where will it move to, or where will it go? If we start with the first one, right? Unfilled orders cause prices to turn. Another word for unfilled orders, supply and demand. Okay? And I had those orders in front of me. So I trained my eye to see what those orders look like on a price chart. Okay? Again, if price is declining, it will decline, right? But when it reaches a price point where there is equal or greater demand, price will stop falling and turn higher, and vice versa on the supply side. So unfilled orders cause prices to turn. A lack of significant supply and demand, right? Another way to say that, filled orders or a lack of supply and demand facilitates price movement. So we need to get to a point pretty quickly where, right, that's the whole goal of this, is when you look at any price chart of any market for any financial purpose, what you're seeing on the chart are those two things and those two things only. Filled orders, unfilled orders. Because everything on the chart represents those two things, okay? The problem is most people don't even know to look for that. Number one. Number two, when the logic makes sense, they don't know how to identify it. Does that make sense? Is there a third thing too that is reflected on a chart? Is there anything else reflected on a chart besides filled orders or unfilled orders? No, there's not. And EP, I see your question up here. Good question. How do you filter through the noise on the charts to see supply and demand? Well, let's talk about that for a second, because I think a lot of people have that question. What is the noise that you're talking about? My real question is that noise that's actually on the chart, or is that noise somewhere else? Where is that noise? Where does that noise actually exist? Right? Chart's made up of two things. That chart's actually only made up of one thing. It shows you where the filled orders are. That's a print on the screen, a candlestick, a line, a bar. Okay? So the noise on the chart is what's in everybody's head. It's all these other things that people add to a simple and straightforward equation, which is supply and demand. Exactly. All right, so let's move forward. Now, when we look at a price chart, let's bring up a chart. Here's the dollar. Okay. When we look at a price chart, let's blow this one up. So here's a chart we looked at last time we were together. We identified this demand zone, right? Price came down to hit our demand zone and is now rallying up. We'll talk about that in a second. But again, the price chart or these candlesticks show us filled orders. That's what candlesticks represent. When a trade happens, you get a print on the screen. So our eyes are always going to see filled orders. But this picture here, when your eyes see it, your brain needs to process that. Does that make sense? Okay, here's our little supply demand stick figures, our little people. Demand, supply, a lack of supply and demand. Another way to say that, follow me here, unfilled buy orders and significant unfilled buy orders, significant unfilled sell orders, filled orders. Where does price spend most of its time in this picture? Where does price spend most of its time? In the middle. Why is that? Yes, it does. In any market, it spends most of its time, relatively in the middle. Why is that? It's because competition to buy at demand forces price back to the middle. Isn't that, yeah, no, Michael, it's not, yeah, no, you're not wrong, but it's not that the market is comfortable there, okay? It's a simple numbers game, and there's no one person or one institution or one government that can print money that controls any of this. That's not how it is, okay? Remember Adam Smith talked about the invisible hand? Have we all heard of the invisible hand? I think a lot of people say, yeah, that sounds good, but what does it mean? It's this kind of force like Star Wars, right? The end of that sentence is the invisible hand of competition. Make sure you understand that. The invisible hand of competition. So competition to sell up here forces price to the middle. Competition to buy down here forces price back to the middle. Whether we're trading for daily income, weekly income, building and protecting that longer term wealth, it doesn't matter. Okay? A market is a market, supply and demand is supply and demand. So notice all of the kind of green, little green people down here, right? Remember when we looked at the dollar, and we're going to find, some opportunities going forward. This picture represents that. How do we know? Well, we have our pattern that represents demand. We have not too much trading at the level. Price doesn't spend a whole lot of time here. And then it shoots up like a rocket. The fact that it rallies away from this level as it does out of the picture of demand here, right? Which creates that picture of demand, I should say. That tells us there's a supply demand imbalance here on the demand side. Okay. And I say significant because if that statement wasn't true and supply and demand was in relative balance here, wouldn't price just keep trading sideways? It would, but it can't. Why? Out of balance, big imbalance. Okay, so we've got the demand side, right, somewhat figured out here. When I say somewhat figured out, at the end of the day, these are all educated guesses, right? We just want to make sure we have we're focused on, to make that educated guess, we want to make sure that the evidence we're looking at is very real and very focused on supply and demand and only focused on answering these two questions. Anything else that you add to this simple and straightforward question is that noise. Yeah, so Michael, I see what you're putting in the chat here. So you're saying it's a lack of competition rather than fair price. I'm not. We're saying is at demand, there's competition to buy, too much competition to buy. That's why price can't stay here. You have more demand than supply. So as soon as the last sell order is filled in this area, you have people competing to buy at a price point where you don't have any supply left. That's going to push price higher. Okay. Now let's say there's not much in here to stop price from rallying. It'll get up to this area, and then the same thing's going to happen. You're going to have trading going on, and all of a sudden you're going to run out of buyers, and you're going to have a lot of supply or competition to sell. Without buyers at that price point, that's going to force price back to the middle. Does that make sense? A fair price is a good word for it. It's our job, or I should say maybe my job, to help you understand exactly what this picture looks like on a price chart. Now, if I fast forward a little bit, I'm going to stick to the live charts mainly today, but I have plenty of examples in here, and these are all from the past few days. Okay. Share this with you here. Here's oil from the last 2 days. In fact, let me share this one with you. Right here. Here's the most recent. Whoops. That. Go. Here's oil. This is right out of these morning sessions that I deliver. This is just the last few days, right? Here's the setup live in the session with the members from the session. We had our demand zone here. Okay. Supply up here. And look at all this. Now the trade hadn't met entry yet. See how it's falling to our entry point? Brian, yeah. But look at this picture in the shaded area in the middle. What does this picture represent? Filled orders or unfilled orders? What does that picture represent? Filled orders, yes. Filled orders facilitate price movement. So we want to look outside of this area of filled orders and find some fresh demand. And well, at this point, this wasn't fresh supply, but we had this already. Okay. So we want to be buyers down here at demand a couple days later, a few days later, right? I don't know, maybe 2 days later, a day later. Price came down into our level. And again, trading happened here. And all of a sudden, the last sell order was filled, and you had demand or competition to buy. That forces price back up. Why did price move so fast here? Because it was right through the white space, the area of filled orders. Does that make sense? Yeah, so, Some people, and Aussie, I see your question there about so you're going for the extremes. So sometimes I'll get a question like that, and I'm not saying you're directly asking this question, but people say, "Well, Sam, it looks like you're trying to pick turning points and tops and bottoms," and they ask it as if it's like kind of a taboo question, right? Absolutely, that's what we're trying to do. There's no question about it. Are we trying to pick exact tops and exact bottoms to the penny? Of course not. But are we generally looking to buy at the turns and sell at the turns? Absolutely, we are. No question. Okay. Um, and most people don't, think that's almost taboo to talk about in the trading world yet. How do you make money buying and selling anything anywhere else in life? Think of any successful business on the planet. How do they make money? They buy at wholesale prices, sell at retail prices. If they don't do that, what happens? They're out of business. Okay. All of a sudden, when it comes to the trading world, people say, oh, no, you just have to follow the trend, wait for prices to go up, wait for this big uptrend, and then start buying. If you really think about it, um, could you make money doing that in any other part of life, any other business out there? See what I'm saying? Okay. The whole point here is focus on what's real, not what you feel. Right? And all I'm trying to share with you is, real world trading and investing. And I saw that again on the trading floor of the Chicago Mercantile Exchange. Here's another thing that will get people if you're new to this. If you look at the chart on the left, this is just the other day, price in oil is collapsing, right? Would anybody be a little scared or afraid to push the buy button there? Anybody be a little scared to do that, a little uncomfortable? Most people, especially if they're new to this, would be, right? So let's talk about that for a second. The only reason you're saying that and feeling that is because we're all conditioned from a very young age to do this backwards. Right. Exactly, because it's a downtrend. See how brainwashed you are to think that way? Okay. What if I told you that I don't know, someone tell me the price of gasoline in your area, wherever you live. I don't know where everybody lives, but what's a gallon of gas cost where you live? Anybody care to share? All right, so somewhere between 2.50 and $3. The UK, it's about a pound, a little over a pound. Okay, 4.5 Canadian. All right. So let's say, yeah. So here in Chicago, I live in Chicago, and let's say I don't even know exactly what it is, right? But let's say it's $3 a gallon, $3 a gallon, and let's say we all lived in Chicago here, right? $3 a gallon. What if I told you that for the next hour, right down the street, there's a gas station that is selling gas for 50 cents a gallon, but they only have a certain amount left and they're cutting it off after an hour? What are you going to do? How are you going to feel about that? Yeah, you're going to load up as much as you can, right? Rush to buy. Exactly. Right? You see look at how excited everybody is. It's not even a real story. Okay? Here's what it makes this business of trading so unbelievable. Think about it. What chart are we looking at here? This is a real chart. This was live in our sessions. You see it. What chart are we looking at here? What market is this? Isn't oil gas? Don't we turn oil into gas? It's on sale down here. But many of you that said you were terrified to buy it here because it's a financial market are equally excited to buy the gas or the oil if I tell you it's now something that you put in your car and not pushing a button on your computer screen, a buy button. See the difference? People don't realize that everyone's brainwashed to do this opposite from a young age. Does that make sense? Okay. So, Carlos, because we need to be able to identify true and quality fresh supply and demand zones, and the white space, okay, the area in the middle, right? Okay, let's go back to the live charts here. So we've got the dollar. Now, the dollar is on the move. And where do we expect the dollar to go from here? And where's the next possible turning point for the dollar? So let's do a combination of, I want to keep going over the foundational stuff because we have so many new people with us. But let's also make sure that we're looking forward and applying this, because at the end of the day, that's what matters. So the dollar turned at our demand zone. Now, why did price spend so little time at that demand zone before we go on? Yeah, Brian, no, we go over this, and this is just kind of, foundational stuff. Absolutely. And Brian, if you have any questions with this, certainly shoot me an email. All right. Yeah, because there was so much competition to buy, right? All right. So now let's say we've got the demand side figured out. What about the supply side? Where is there a significant supply and demand imbalance on the supply side? Well, let's look at the evidence. We know that price went all the way up here to 98.95. So when price was up here, can there be any significant supply at or below this price? No. Can there even be one unfilled sell order below this price when price is there? Can't. Impossible. It'd be filled, right? Now, you can't have price here and someone's trying to sell down here and the order's not filled. It's like not physically possible. So we know that the significant supply is not likely to be till here or higher. So this initial move out of the area opens up this initial profit zone for us. So we expect price when it comes down to here to rally back up to here. And if we want to know beyond this where it's going to go, we need to look higher and to the left. For that, we're going to go to a larger time frame. And we'll look at the daily, I'm sorry, not the daily chart. Let's go to the, whoops, I didn't need to do that either. There's that chart. Okay. Let's go to the weekly chart, and up just above 99. I can explain the dollar without even looking at chart because I look at this so much. But you can see, and again, for those who've been with us for a while, all that's happened this year is price has just gone from our demand zone that we had, before the year started, and slowly rallying up to the supply zone that we had before the year started. So we don't really have any significant supply until about, I think it comes in at about 90, just above 99, like right up in here. There's like 3 little supply zones up in here on a smaller time frame. But so there's room. Okay. That rally-based drop, Aiden, is not fresh supply. It can't be. Okay. It's not, it can't be fresh supply. All right, that's the dollar. Now, for those of you that are in the sessions, we've had some people that have been short the euro for a little while. Why? Because the dollar going from demand on its way up to supply. Here's a level that we've had in the euro. Okay, again, notice the pattern, and profit zone being opened up to down here. Okay, price again. This is just exactly what I've been showing you. Anybody take this trade, by the way? I know we've been going over euro almost every time we have these sessions here the last couple weeks. I think our last session was a couple weeks ago. Okay. All right. Well done. Again, all we're doing here, identifying retail prices, selling at retail prices. The spots is not going to be that different. Let's see. Let's take a look at the spot. Okay. The spot was pretty much the same. You're going to see a little more wiggle room in the spot market. Okay. But take you down to here for a second. So what we have to be careful with in the euro, just like we have that dollar supply coming in just above 99, we have demand in the euro starting right around, just below 110. Okay, just below 110 is where we have some demand um, coming in this market. Does that make sense? And that will line up obviously nicely with the dollar. What is that? 109 or something? 9 and change. Now, of course, it has to. The dollar is made up of it's a kind of weighted pie, right? And the euro takes up a big slice of that pie. Now, I can go to any market you want to go to. Doesn't matter to me. Quantify supply and demand and market turning points in any market. So, sure, we can look at some of those markets you're typing into the chat. Doesn't matter. Let's look at the Euro Swiss, which I have not looked at in days. Let's wait for one more chart to pop up here. Great to be with everyone, by the way. And here at fxstreet, while we're waiting for these charts to come up, who's been with fxstreet and fxstreet sessions for more than 5 years? Anybody been here more than 5 years? And Bogdan, it's pretty much got the mic as close as possible. Anybody been with fxstreet for more than 5 years? All right. Yeah, so we've been doing these for, boy, I don't know how many years it's been, but it's been quite a few. All right, let's keep going. Gotcha. Okay. Yeah, no, fxstreet is great. They really do a great job and try to stay at the forefront of everything everything important going on. Excellent. Before I forget, let me do this. There is my email address. So it's a little bit different. If you have my old email address, I won't get it. So it's sam.seiden@tradingacademy.com. So I'm just putting it in there now so I don't forget. But if you have any questions, or if you're struggling with trading or any of that, any of that financial stuff at all, so you can certainly shoot me an email anytime. Just maybe identify that you're from the FX Street webinars. Oh, I'll answer. I'm pretty caught up. Occasionally, emails get buried, so you have to resend it. But okay. Yeah, if you scroll up, it's I put it in there, Bogdan. Okay, let's get on with this chart. So we always start with the larger time frame. Now, this is a great market to start with because I have not looked at this chart in, I don't know, a couple weeks. Okay? So I may have a general idea what it looks like. So we start with the weekly chart just to get an idea of where we're at in the bigger picture. Then I'll pop up the daily and see if we have any kind of levels that are nearby. So, and we notice that we have some supply that's holding up here a little bit. And the bottom half of this, we haven't really gone, well, I guess we've gone halfway into this area of demand here. So that tells me in the smaller time frames, we can probably look for longs and shorts if we, oh, here, I'll type it in again. Oh, I know what I'm doing wrong. Hang on. Sorry about that. There it is. Okay, so now we come down to the smaller time frames. All right, so I know we're not right up against significant demand. I know we're not right up against significant supply. So any smaller time frame levels, we can look to take that. All right, so I'm down to a 4-hour chart. Let me just look a little bit more. I just want to see something here. One more chart here. Okay. So what I was looking at, as soon as I pulled up this 4-hour chart, right? The way that we get to fresh supplier demand levels, we start with current price, right? We go left and up until we get to, the type of level that we're looking for. So we've got some stuff in here. There's an area that jumps out. There's another area up there that jumps out. But I want to look at that on a little bit smaller time frame because when we do, that upper level is no good anymore. So notice all these pivot highs here. A lot of people look at these pivot highs and say, oh, those are all supply zones. Those are never fresh supply zones. And if you want to try to keep your trading high probability, low risk, high reward, okay, you want to stick to fresh levels. And so there's a nice level, but prices already come back to that level. So yeah, price is moving sideways. And right, price is moving. By the way, this area that I'm circling here, identifying, what does this picture represent? Filled orders or unfilled orders? What does this represent? Filled. So we don't want to look in there. We don't want to take anything in there, right? But I also see that this range is pretty big, meaning if price breaks down through the range, you can have a nice big move up back through it. If price rallies out of the range, we can have a nice big drop through it. Okay. So let's take a look at this area right here. Go to that level right there. Okay, there's a few reasons why we would take this level. Now, we would never take this level. And I know these two levels look the same, but they have one thing that makes them very different. Right, Michael, yeah, no, that's a good point. Let me just address that real quick, and then we'll come back to this. Right? Yeah, ranges are frustrating, but and look at, price spends most of its time in the middle. It has to. You'll see if you've been in these sessions for a while, what do you notice about our supply demand levels? When price comes to those levels, how long does it stay there? Does it stay there a long time or a little? Yeah, very little. When price comes out of this area and down here, it shoots right back up. When price comes up in here, it shoots right back down. Right? That's what you're looking at with all our examples and all it's so many of the trades we put out here. That's what happens. So this is an area we'd look at right up here. And then below that, we'd have to look down and left, and we'd have to go pretty far back. Let's keep going. Let's look at another market. Just want to make sure that we get to, just a few markets here. Time always flies. All right, we can look at, let's see. We looked at the euro, we looked at this. I see someone wants to look at the S&P. Another market up here. So we starts to switch. Here's the euro against the pound. Okay, just waiting for these charts to come up here. Anyway, we can start without that. One chart that's jumping out at me here, while those other charts are coming up, is this one. So we look at the daily chart. See sitting just above is an area where you're likely to see a decent amount of supply. Okay, and then below we don't really have any significant demand until down here. So let's put these levels in. Again, I'm doing this kind of quickly and also trying to stick to the basics, just to kind of demonstrate, what we do, how we do it, and again, don't think this is just like. Remember, I've been doing this for a while, and there are very specific rules that I'm following. Everything needs to be rule-based, in my opinion. Again, all I'm sharing with you is this is how markets really work. This is how money is really made and lost in the markets. I'm not sure which zone you are talking about, Aiden or Sammy. Okay, so this is obviously a very big time frame, but this gives us a good idea of where prices are at. Now, if you look at this wick up here, price almost gets up to this level. So this gives us a kind of a secondary clue that there's quite a bit of supply up here. Banks are selling up here, right? Banks have a lot for sale up here. Whoever's selling up here, and it's never one person or one group, did they sell all that they wanted to sell? All of the sellers here above 91.25, or did they sell all that they wanted to sell? All the supply up there, was that filled? Right. The answer is no. And we know that for sure, right? Because, right, if that statement wasn't true and supply and demand was now equal, prices would just keep trading sideways, and they couldn't. Right? Price fell away from that level, and well, you see. Okay. Yeah, Alabi, you can. There are certainly videos on the fxstreet website, and of course at the Online Trading Academy website. And maybe someone in the chat can kind of help you with a video. I actually don't keep track of those videos. And while there are a lot of videos on YouTube, I've actually never posted those. That's fxstreet and others posting those. So anyway, but the group here is very helpful, so I'm sure they can help you along. Yeah, so pip are those are in and of themselves. Those are not fresh levels. But a lot of times when you find those, I see your question above. When you find those, say in a larger time frame, and you look inside there, you might find a fresh level or two. So that's probably what where the confusion is. But those in and of themselves can never be fresh levels. Right, and what Deep is saying here is correct. Does that mean that you can't take trades there? You can. Trades at those levels certainly work out, but you need to see where it all begins. That's the point. Okay, and again, this is just an intro to the strategy, trying to do the most we can with the time we have here. So looking at the larger time frame, so if we want to go to a smaller time frame and take a position here, the chart tells us here that we probably want to lean on the short side, not the long side, right? So if we were to go down to smaller time frames, I don't actually see too many, too many good shorting opportunities here at the moment. But anyway, that's where that market is likely to go. To the equity index markets. So these are levels that I've had on the chart for quite a long time. If we take a look at the S&P, we've been falling from our supply zone here multiple times. So there's probably not a supply left up in that area. Okay, but there is a level I want to share with you. Let me find it here. Oh, maybe it's not on that chart. Hang on. We do have it here. I'll get it for you. Hang on just a second. Let the chart load. So here's another view of the S&P. And what's been interesting is with all the news here for a second. Here's that same chart. Think about the last week and a half, 2 weeks. All the news, tweets, reports, G7 stuff, press conferences, causing extreme market volatility. People are afraid of a recession coming. What else? Trade wars, all that stuff. That's caused the markets to be extremely volatile the past couple of weeks. But at the end of the day, what has happened to the equity index markets? Where have they gone? They've just gone from our supply zone down to our demand zone, and are now on their way back up to supply. Does that make sense? My point is, all this news and all this noise that I see, people were referencing in the beginning, it just speeds up what was going to happen anyway. Does that make sense? So we do have some supply in the equity markets, though it is higher. And I was a little to show you. I just can't remember what chart it was on at the moment. But I think you get the point. You know what? Let's go over to the. We were looking at oil earlier, but we haven't looked at it here. All right, chart I told you is right out of the sessions. Okay. Now, what if price comes back up to this level? Would we take this area again? You can. It's just not high probability. See the white circle? The white circle means it's not a fresh level. The yellow that was a fresh level, but now, just the price came into that level. So we'll certainly be looking at this area above. And if prices got up to the middle of this area, we'd be looking for another pullback in oil. Things really interesting when you get up to, I'll show you where, in oil anyway, they're not close, but take a look. So below current price, you really need to get below 51 to get into, the really quality demand zones. And again, look at this area in the middle. What does this represent? Filled orders. So we're very careful with oil at current prices. Now we had we played those levels on the 60-minute chart. They were fine, but you have to understand a little bit lower probability because price is in the middle. Okay, so we've got our demand zones here, supply zone up here, filled orders in the middle. That is this. Does that make sense? And again, it's just a matter of really just training eye to see all this on a price. So I know we're out of time here, but there's just put my email address in the chat. There it is. Sam@thatsidenet.tradingacademy.com. Hopefully that was helpful. I try to go slow enough and basic enough for the new people and get some charts in too. So I do a morning session every day where we go over many markets, stocks, futures, forex, some options. And again, if you have any questions, send me an email. If you've sent me one in the past and I didn't reply, just resend it. Got a nice long weekend here to catch up. All right. Have a great weekend, everyone, and we'll see you next time.